Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover what the top dogs of the corporate world are really up to. And let me tell you, this latest filing from Datavault AI Incorporated is quite the head scratcher. It involves warrants meme coins and a whole lot of legalese. Buckle up, because this might get interesting. So what is the big deal today? Well, Datavault AI Incorporated has filed a Form 8K, which is basically a report for big important events that happen outside of their regular quarterly filings. Think of it as a special announcement to let everyone know what is going on. The main event here is an announcement about a dividend distribution. Now, this isn't your typical cash dividend. Datavault is handing out warrants, and these warrants give holders the right to buy shares of the company's common stock in the future. This filing tells us that the date to decide who gets these warrants, the record date, is the 7th of January 2026. The actual distribution of the warrants, according to the company, is expected around the 21st of February 2026. But they are keeping it a bit flexible, saying it could be another date if the board decides. Now, who gets these warrants? It is not just for people who own common stock. They are also extending this to holders of certain warrants that haven't been exercised yet, some convertible promissory notes that are still active, and even certain stock awards or grants that are outstanding and entitled to participate. Basically, if you have certain types of Datavault equity or debt tied up, you might get a piece of this warrant pie. The rule for getting these warrants is pretty specific. For every 60 shares of common stock you own, or essentially the equivalent value in other Datavault securities, you'll get one warrant. Now, if you own fewer than 60 shares, you're out of luck, you won't get any warrants. If you own more than 60, but not in perfect 60 share increments, say you have 125 shares, you will only get warrants for the full 60 share blocks. So in that example, you'd get 2 warrants. It is a bit like a bulk discount for having a good chunk of shares. The actual warrant itself allows the holder to buy 1 share of Datavault common stock. The price to buy that share is set at $5. This price can change though if things like stock splits or dividends happen. The warrants will be valid for 1 year from the distribution date. But here is where it gets really interesting. To exercise these warrants, meaning to actually buy the shares for $5, you also need to hold at least 1 Dream Bowl meme coin i2 token in a digital wallet connected to Datavault. Yes, you heard that right, a meme coin is a condition for using these warrants. The filing emphasizes that the company has made separate announcements about these tokens, and investors should check those out for more details. This is a very unusual condition for exercising warrants, and definitely something to pay close attention to. Datavault also states that this report and the announcement of these warrants are not an offer to sell or a solicitation to buy any securities. They are planning to file a prospectus supplement for the shares that these warrants can be converted into. This prospectus will contain detailed information and, importantly, risk factors that investors should read carefully. Now, like many companies, Datavault includes a section on forward-looking statements. These are essentially educated guesses about the future. They warn that actual results could be very different from what they expect. They point to several risks, including potential legal proceedings related to the distribution warrants and the meme coin. They also remind us that the board has the right to change the dates or even cancel the whole distribution process. The filing also lists exhibits. The most important here is Exhibit 99.1, which is the press release dated the 7th of January 2026. This is where all the details we just discussed were first shared with the public. Looking at this filing from a broader perspective, Datavault AI Incorporated is certainly trying to do something different and perhaps generate excitement. The use of warrants as a dividend is a way to incentivize future participation in the company's stock. However, the linkage to a meme coin is highly unconventional and introduces a significant layer of speculative risk. It's a clear attempt to tie the traditional equity markets with the burgeoning world of digital assets and tokens. This strategy could attract a new class of investors, but it also dramatically increases the complexity and the potential for regulatory scrutiny. The success of this warrants distribution will likely depend heavily on the value and adoption of the Dream Bowl meme coin II, and the overall market sentiment towards such novel financial instruments. It is a bold move that could pay off handsomely if it captures the public imagination, or it could backfire spectacularly if it is perceived as too gimmicky or if the token fails to gain traction. The risk that the board could change or cancel the distribution also creates uncertainty for existing shareholders and potential warrant holders. Alright, that is our deep dive into Datavault AI Incorporated's latest filing. What is your take on this warrant and meme coin situation? Do you think it is innovative or just a bit too out there? Drop your thoughts in the comments below. If you found this breakdown helpful, hitting that like button really supports the channel, and subscribe so you don't miss future Corporate Decoded episodes. And hey, don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.